Although the current financial crisis started from the housing market in the United States, the impact soon developed and spread to the rest of the world's economy. Many economists commented that the turmoil in the world financial markets has led to the worst economic turndown since the Second World War. The recession in most of the other developed countries is as bad, if not worse, as that in the United States. The European situation is especially precarious because, contrary to popular belief, European banks are in worse shape than their American counterparts. Britain is said to be the worst affected among Western European countries. The GDP growth of Britain contracted 1.3% in 2008, which indicates that the UK is at a very risky position of becoming another Iceland or Greece, which melt down to bankruptcy during the recession. Japan's economy is also threatened by recession, and its stock market declined rapidly, but it is not affected by the crisis as much as Europe and America. Part of the reason is that Japan was already at a tragic situation because it has never really recovered from the crisis of 1990s. The Arab oil exporting countries also have experienced rapid changes in their economic fortunes last year. The OPEC price of oil fell from a peak of just over $130 per barrel to under $40 per barrel in late 2008, which has reduced the consumption and discouraged investment. The emerging markets also have been hammered by the crisis. By the end of 2008, the stock markets in Brazil, Russia, China, and India had experienced a severe turndown. However, these markets have still been able to boost its growth rates that could exceed those of major Western countries in the following decades. Some economists point out that there seems to be a great and rapid shift of wealth and power to China and India and other emerging economies, and the current financial crisis is going to confirm and possibly accelerate the shift in economic power to Asia, especially to China. China is not proving immune to the global crisis, but what is remarkable is that despite the crisis and an apparent loss in the economy's momentum in the last quarter of 2008, it appears that the Chinese economy could still manage to hit 7 to 8% growth in 2009. The global financial crisis also results in a slowdown of India's economic growth. However, the strong recovery in the market has attracted billions of dollars of global investment. The current fiscal of 2010 could turn out to be one of the best in the recent years for the Indian economy. In conclusion, all countries in the global financial market have been affected by the current crisis, although many developed countries are hit more severely than the emerging economies. Thus, the economic performance of the emerging countries will be very important for revival of global economic growth.